Hi everyone and welcome back to the channel. So in this video I'm going to go through my 2021 investing strategy to reach financial independence. And you may have noticed that I'm in a different spot to my usual spot, and the reason why is because I'm actually on a boat, and this is my auntie's boat. It's a houseboat and she actually lives on it. It's pretty spacious and it does have a couple of bedrooms, so if you'd like to see a boat tour video, make sure you give this video a like, and if we get to 200 likes on this video, I'll give you guys a boat tour so you can see all of the different rooms and all of the different living arrangements that they have on this houseboat, which is really cool. And make sure you subscribe to this channel with the bell notifications on so you don't miss out on that video. So before I actually started investing at all, I saved an emergency fund. And what an emergency fund is it's 3 to 6 months of your living expenses saved in a high interest savings account or an offset account so that you can access this money at any time. Personally, I have 6 months of my living expenses saved in my offset account, which is basically like a savings account which is attached to my mortgage, and by putting money into the savings account I'm actually offsetting the interest that I'm paying on my mortgage. So if you do have a mortgage, this is something that you can look into setting up yourself perhaps, but it is important to note that not all banks offer this offset account option. And the second thing that I do before I actually started investing is I try to save as much money as possible. So currently each month I'm saving and investing 60% of my income. But this didn't happen overnight, so a lot of it came down to me trying to increase my income as much as possible so that I had a bit more of disposable income that I could save and invest for my future. And I also did try to reduce my expenses as much as possible so that I didn't get sucked into lifestyle inflation even as I started earning extra money. And I'm going to show you guys a little trick that my auntie taught me on how you can save money on your electricity. So a good money saving trick that my auntie taught me is to you can actually use somebody else's power and electricity and water. So that's what we're doing here. We're using somebody else's power and water, and it's a really good money saving trick. So definitely try that one at home. I'm just kidding, I'm not that extreme, and neither is my auntie for that matter. But here are some things which have helped me save 60% of my income. So the first thing is increasing my income by getting a raise and then also starting multiple side hustles so that I have multiple streams of income. Increasing my income enables me to have a bigger disposable income that I can save and invest. Another thing that I do is I track my expenses every single month to make sure that I'm staying on track with my saving and investing, and I'm not getting sucked into lifestyle inflation and spending too much money on things that I don't need. I also try to save as much money as possible on things like electricity, my phone bill, and my internet. And I've put some links in the description below if you'd like to check out any of my internet or phone providers. I've shopped around quite a bit for these ones, and these are pretty much the cheapest ones that I could find on the market. I also do meal prep, and I try to make my coffee at home as much as possible. And I try not to buy as much convenience food, which are things like Uber Eats or takeaway, which is basically those times that I'm too lazy to cook. So I try to reduce those times as much as possible, so when I actually am going out to eat at a restaurant or a cafe, it's a great experience, and it's something that, you know, I'm spending with my partner or a friend, and we can turn it into a bit of a day. And the final thing that has helped me save money is really prioritizing the things which are important to me and spending money on those things, but trying to cut out all of the things that don't really bring me value and don't really make me happy. And by the way, if you're enjoying this video so far, make sure you give this video a like and subscribe to my channel if you'd like to see more videos about investing and personal finance. So let's jump into my investing strategy for 2021. So one of the things that I will be doing in 2021 is dollar cost averaging into ETFs. So dollar cost averaging is when you make the same investment at the same time in a market tracking ETF or index fund. And the goal of dollar cost averaging is to get the average returns of the market. So with this dollar cost averaging strategy, you might buy your ETFs when the market is really high, you might buy your ETFs when the market is really low. But if you do this consistently and you do make the same investment at the same time, you will get the average return of the market, which is what the dollar cost averaging strategy is trying to get you to replicate. So with my ETF investing, I do believe that time time in the market beats timing the market. Because, well, one of the things that I've really learned this year is timing the market is really, really difficult to do. And Brand, she's doing a pee. My auntie's dog just did a wee on the boat. That's funny. Do you want me to help? So dollar cost averaging is the method that I do like to use when I am investing in ETFs, because I do believe that time in the market beats timing the market. And if there's one thing that 2020 has taught me, it's that nobody really knows what's going to happen with the market. Even if the market is overvalued, we don't really know when it's going to crash. It could be a couple of months or it could be a couple of years. But personally, what I do like to do is still invest anyway, even if the market is overvalued, because at least I'm getting those average returns of the market, and if the market does go up, at least I'm not missing out on that good compound interest. And the good thing about dollar cost averaging is you don't need to think too hard about when you need to invest your money and how much, because you're pretty much investing the same amount of money at the same time in the same ETFs. And since most investors don't beat the market, it's a really good strategy, I think, for most people to use. And that's one of the reasons why I'm investing most of my money using the dollar cost averaging method by investing in ETFs. And the other investing strategy that I'm going to use is investing more in individual stocks using the value investing model, or the margin of safety. You've probably heard of value investing before. It's the method that Warren Buffett and many other high-profile investors use when they are picking individual companies to invest in. And this is the investing strategy which I personally use as well. And the whole concept of value investing is to buy really, really great businesses at really good bargain prices when the stocks are said to be undervalued. So my method of picking individual stocks to invest in is basically I go through a list of all of the companies that I know, and I go through these businesses one by one, and I really start to analyze the business and also the financials as well. And if you'd like a full breakdown on how I actually go about my researching individual stocks before I invest in them, you can watch this video up here. And I do go into a lot of detail in my investing strategy and how I pick individual stocks to invest in. After I've done my research and my due diligence, and I know that this business is a really great business and a business that I really do want to invest in because I believe in them long term, then I do calculate the margin of safety price. And this is the amount of money that I would like to buy the business at a bit of a margin of safety price, just in case I am a bit off with my calculations of the intrinsic value of the business. And the great thing about value investing and picking individual stocks to invest in is you can get even better returns than dollar cost averaging into ETFs. And that's why I do like to also have a portion of my portfolio where I am picking individual stocks to invest in. But still, most of my investments are with ETFs using the dollar cost averaging method, because it is really difficult to time the market. So it all kind of just depends on which method you prefer to use when you are doing your investing. Do you prefer to dollar cost average into ETFs, or would you prefer trying your hand at picking individual stocks to invest in? This is something which is completely up to you, but for me personally, I do like to do both. And the reason why I do so much research into individual stocks before I invest in them is, well, sometimes you can invest in a really great business, but invest in them at the wrong time and at the wrong price. If you invested in Microsoft at the peak of the tech boom, it would have taken 15 years in order to break even on that investment. So that's just one example of buying a really, really solid and great business at the wrong price, which can still turn out to be a bad investment. And that's one of the reasons why I do like to do a lot of research into my investments before I invest in them. And the final thing that I'm doing is I am leaving some cash on hand in my offset account so that I can buy an investment property, which is super exciting. So I'm planning to buy an actual house a little bit further away from the city in Sydney, but still in this greater Sydney region. And I'm planning to buy this house and then rent it out to some tenants. So make sure you do subscribe to this channel if you'd like to see more videos about my process, when I am buying an investment property. I am also leaving some cash on hand just in case the market does dip. A lot of people have been saying that there could be another stock market crash. I'm not an expert or an economist, but I am still leaving some money and some cash on hand just in case there is more of a crash in the market so that I can buy businesses at really undervalued prices. But I'm not keeping all of my cash on hand. I am still dollar cost averaging and making individual stock investments when I do see a good opportunity. Thank you so much for watching this video. I hope you enjoyed it and found it useful. If you liked this video, make sure you give this video a like and subscribe to my channel for more videos about investing and personal finance. And if you'd also like to join a community of people who are also super passionate about personal finance and investing, I've put a link in my description below to my completely free Discord community where you can join and chat to other like-minded investors who are also on a path to reach financial independence. So make sure you click the link if that sounds like something that you're interested in. I'll see you in the next video. Bye! And if you'd like to see some more videos, I've put some links to some videos here. So make sure you click the links and click through to another video.